Hello traders, and welcome back to V-Shark Trading, the place where we follow the footprints of smart money. In today's video, we're going deep into a very important topic, order blocks. We'll break down what an order block is, why it matters, and how to identify a valid order block that gives you a high probability trade setup. If you're learning price action or smart money concept, this will be a key foundation to start seeing the market the way institutions do. So first things first, what exactly is an order block? An order block is a price zone where large institutions, what we call smart money, placed massive orders to move the market in a certain direction. When price returns to this zone, it often reacts strongly because there are still unfilled orders or liquidity left behind. There are two main types. Bullish order block. The last down candle before price strongly breaks to the upside. Bearish order block. The last up candle before price breaks down aggressively. In simple terms, an order block is the footprint smart money leaves behind, and our job is to spot it and trade alongside them. Not all order blocks are the same. We can classify them into two main categories. 1. Continuation order block. This appears in a trending market. Price pulls back into the OB, finds liquidity, and then continues in the same direction. These have a higher win rate because you are trading with the dominant trend. 2. Reversal order block. This marks the beginning of a new trend, a market top or bottom. These offer huge potential reward, but they are riskier since you're betting against the previous trend. Knowing which type of OB you're trading helps you set realistic expectations and manage risk accordingly. This is the most important part. Not every OB you draw is worth taking. Here are my 6 rules for filtering high-probability order blocks. Rule 1. Strong breakout candle. The OB must be created by a large-bodied candle, showing real momentum. Rule 2. Opposite price action before the break. You should see at least 2 to 10 candles moving in the opposite direction before the breakout. This confirms a clear shift in market behavior. Rule 3. Significant break of structure. Price must break at least 1/3 of the previous price range. A weak break means weak conviction. Rule 4. Creates an imbalance, fair value gap. After the breakout, there should be a clear imbalance in price, a sign that price moved quickly, leaving liquidity behind. Rule 5. Volume confirmation. Volume of the OB candle should be at least 1.5x the average of the last 10 candles. And at least 1.52x the previous candle's volume. Without strong volume, the OB might not hold. Rule 6. The zone must be untouched. After the breakout, price should not have revisited the OB yet. A clean OB is more likely to hold on the first retest. Let's put this into practice with a real chart example. Show a chart, e.g. pound sterling to Swiss franc or XAU/USD. Here's a bearish OB. We had 5 consecutive bullish candles first. Then a strong bearish candle broke through previous structure. Its volume is 1.7x the 10 candle average. We can clearly see an imbalance right after the break. When price came back to this OB, it reacted strongly and dropped again, confirming this was a valid OB. Now compare this with a weak OB. Small breakout candle, low volume, price tapped it multiple times. That's not something I'd risk my money on. Once you have a valid OB, here's a simple approach. Place a limit order right at the OB. Split it into two positions. O first entry at the edge of the OB, stop loss just 5 pips below or above. O second entry in the middle of the OB, same stop loss. Take profit using Fibonacci extension or key H4 support/resistance zones. And of course, risk management is key. I never risk more than 5% of my account per trade, and I make sure all open trades combined don't risk more than 30% of my account. So now you know what an order block is, the different types, and the 6 criteria to spot high-quality OBs. This is the first step to trading alongside smart money. In the next video, I'll show you how to combine multiple time frames to refine your entries and filter out bad setups. If you found this helpful, drop a comment below and share your thoughts. Don't forget to hit like and subscribe so you won't miss the next lesson.